Hello everyone, we are discussing about the Master Commodity Course, and in the Master Commodity Course, in this session specifically, we'll be talking about May wheat. We would be discussing about three important points. The first and most important is the time factor. In this time factor, we'll be talking about wheat. Let's say, for example, from 1852 to 1867, this makes 15 years. From 1867 to 1897-98, this makes it 30 years. From 1852 till 1912, it makes it 60 years. And one more interesting thing is from 1852 till 1917, where we got a high, this is again 50 years. And we all know 50 years is the Jubilee cycle has been given in the tunnel through the air, which is 7 into 7, 49, or we can talk about time times and a half. So this is the first part. The second part again is the structure of the market, where we will be discussing the May wheat with regards to the Enneagram 142857. And third part is we would be discussing about May wheat, and we'll be having that on our chart, discussing how the patterns and the structures of the market has been formed. So let's go one by one. Now the first part, which is squaring of time and price. Here we'll have the calculator ready with us. So we have 1852 to 1867. We have 1867 minus 1852, and the time comes to 15 years. 15 years is really interesting. If we have 50 years into, let's say, the number of months, which comes to 12, we get it as 180. So this can be called as 180 months also. And 180 is the half circle. 180 is half of the entire 360, which is a circle. The next part is from 1867. So let's say we have 1867 and we add 30 years to that, and we get 1897. So 1897, 1898 is been given over here, where we again get a high from this high. So from the high of 1867 to the high of 1898, 1897, we have a high to high cycle, and this is again coming to 30 years. Now from 1852, which is the first year which has been given, if we add 60 years, we get 1912. 1912, we again got a high. So again, we can have a calculation which is there for 30 years from 1852 onwards till 1912. Now, this is the third part where we have cycles of 15 years, 30 years, 60 years. Another interesting thing is if we have 1867 and if we add 50 years to that, we get 1917. And in 1917, again, we had a top of 325. Now, all these things come in a very interesting way. And from the tunnel through the air, if we look on page number 372, we have time times and a half. And he figured that a time equal 20 years or a score. So if we have 20, 20, and half of that, that is 10. We have 20 plus 20 is 40. 40 plus 10 is equal to 50. And over here in wheat, from 1867 up to 1917, we had a 50-year cycle. And we know about a great period of 49 Jubilee years, which is again been mentioned in Tunnel Through the Air. Now, if we look across on page number 222, which is the next page coming, forecasting cotton by time cycles. Here he talks about great cycles. And what are the great cycles? 90 years, 60 years cycle. Then ahead we have 49-50 year cycle. Now this 49-50 year cycle, which has also been called as the Jubilee year. is again been given, and this is also given in tunnel through the air, especially talking about 49 years of period. This is again talking about 49 years of period, jubilee years. We had seen the 30-year cycle, which has been coming from 1867 to 1897 in Master Commodity Course. We have seen about the 60-year cycle, which is from 1852 to 1912. That is a 60-year cycle. We have seen the 15-year cycle, which is from 1852 to 1867. Now, all these important cycles which are there, those are being talked about in the Master Commodity Course in greater details. He has also talked about the 10-year cycle. He has also talked about the minor cycles, which are of 5 years, 3 years, 2 years, 1 years. We'll also see about that. Let's go back to our wheat charts where we'll be able to see about this minor cycles and also our 10-year cycles. So this is wheat from 1867 to 1877. We have a 10 years cycle. From 1905 to 1915, again we have a 10 years cycle. Same way, if we see from 1888 to 1898, again we have a 10-year cycle. And if you look across from 1909 to 1912, again this is like a 3 years cycle. 1912 to 1915, again a 3-year intermediate or smaller cycles, which Gann has talked about. Now, this bigger cycles of 90 years, 60 years, 30 years, 15 years, we'll again discuss greater in details when we come back to those basic topics of grade cycles. Now, we'll try to focus on wheel. Let's look at the chart also. Now, on page number 36 of the book, we have the May wheat swings from 1914 to 1954, almost a data of 40 years, which has been given to us. Now, over here, what we'll do is we'll have from the book the details or description about wheat, and we'll try to simultaneously see them on the chart over here. So we have the chart somewhere around from 1914. So the details have been given over here. 1914 June, low was 84 cent per bushel. This was just before the war started when it crossed 1919 and 122. So we had a high over here somewhere around in 1914, or maybe we had this high of 325 in 1917. So let's look at the chart from this point of view, because before this the chart is not very clear and we just have a low and a high. We start from here, that is 1917. May 17 high was 325. The government stopped trading and futures trading was not resumed until 1920. This is May option that we refer to, and from this time on we'll refer to the May option and give trading indications on the May option. So all this chart which is there of May options only. So 1920, from this time, you would see that old lows were broken, and when prices declined below old top levels, a old low level showing the main trend as down, and you would continue to sell. Refer to chart on wheat 1914 to 1954. So this is the chart which has been shown over here. Note 1921 to 1924 lows of 105, 104 and 101. The last low was 101. So this is the last low which has been coming down to. This is 101, just above 96 and between 96 and 112. So we'll assume this is 1901. So we'll assume that this is 101. Let's plot this on the chart also. So if we look on the chart, we have marked over here 325, and from this the bottom is 101. Now what happened is from here we got an upside movement also. Let's look on the description which has been given. The last low 101 was made in March 1924, a buying level with stop loss of 99. The next stop were 127, 105, and 181. When these highs were exceeded, you would follow the rule and buy at new high. So as maybe probably this high was being taken off, this high was being taken off, this high was being taken off, you can continue buying further. 1925 January high was 2057 by 8. Now, if we look at this high specifically, Gann basically mentions over here is from this high, the trend turned down, and you can see by the chart that tops were lower and bottoms were lower, indicating downtrend. Here, you would follow all the rules and sell short. Now, why did he specifically talk about selling at this specific levels? Because like this top was being taken off initially, this top was being taken off, then this top was being taken off, this top was being taken up, so it was creating higher high, higher high, higher. So technically it should be moving up, but why did Gann tell that this is a selling point? So let's look at the chart and try to find out what exactly happened. Now if I look at the high of 325 and the low of 101, and if you look at the 50% level, that comes to 280. Now, if I look at the May wheat chart from the high of 325 to the low of 101, we look at the 50% level, which comes to 213. 213, and our top of 1925 was 2057 by 8, which was just below our 50% level of 213. And that's why Gann says this is a selling level, because as per the rule, if prices are below the 50% level, there is a weakness and the prices can go down further. So from the 50% level, the prices started moving down. Let's look on the chart. So here onwards, from this level, it made lower lows, lower lows, lower lows, and we came down to a low in 1932. Let's read that further. So we had lower lows which were being made. 1928, again, the prices started moving down gradually, and 84 were broken because this was the previous low and was low of June 1914. So 1914, there was a previous low and declined below this levels, indicating much lower prices. So when the low has been broken, the prices will again start moving down. 1928 April, last high was 170. You would sell more when 116, 112, 93 and 94 were broken. 84 was the low of 1940, and declining below this level indicated much lower prices. 1932 December, final low 43, 3 and 3 by 8 for the May option. This was the lowest that May futures ever sold and the lowest since January 1895, when the last low was 49 cent per bushel. So we got a low, and this low was around 43, 3 by 8. Now over here, if you want, probably on ratios, you can find out where exactly we get 43, 3 by 8. So we can just draw down probably on Fibonacci extension, you can get down a point and try to find out. Maybe this is just as a homework for you. You can just write down in the comments of this video whatever you're getting this as an answer, and probably for few of the answers, we can give something as some free goodies, which is maybe some few tips or something like that. So please do write down your comments so that you can get this free goodies. So what we'll do is we'll have this low, and whatever movement is there from this low, we'll try to see that now. So the low was there in 1932. After the low in December 1932, you would look up the last old highs and watch them. These were 62, 73, 130, 135, 150, 164, 171, 181, 185, 205, 7 by 8. So all these prices, old highs which have been given over here. Now 1933, when the main trend has turned up, you would buy when the prices cross 62, 73 and watch 130. So let's look at the high, what high we got over here. 1933 July May wheat made a high of 128, just below 130, making it a selling level. As we move further, we again get a second high. Note 1937 high 145. On 1939 September, Hitler started the war, and war is always bullish on wheat. And you should always buy when war starts. May wheat was selling around 62 and a half in August 39. So in August 39, before the news came down, before the news of Hitler starting with the war, which came in September, there was already a low. So from this low, in September onwards, the prices started moving. So in 1939, we had a low of 62 and a half. And before this, in 1937, we had a high of 145. So in 1937, we had a high of 145. So we have two figures, 145 and a low which is of 62 and a half. So let's try to plot this on the chart. So we had a bottom of 43, 7 by 8. And from here, we had a high of 145, 146. And from there, again, we got a retracement back. If you look at the 25% level, this comes to 69. And our level is of 62 and a half. 62 and a half. So 62 and a half was probably the previous high that we got in 1932. So it was probably more like a back testing for that level, and that's why it did come down to those levels. Nevertheless, this is the 25% level, just to show that it is almost coming back to those levels, which is again a precise level for us in terms of buying. And that's why we mentioned that 50% level and 25% levels are the critical levels that we are getting over here. And from there onwards, it started moving up gradually one by one. And we again got a top. And this top was somewhere around in January 1948. So let's look for January 1948. So this is 1944, 1945. And then we had 1946 when the high was 180. When it advanced above 185, you would buy more at new high levels, and then when it crossed 205, 7 by 8, the high of 1925, you would follow the rule and buy at new high levels and watch 300 to 325, the highest futures has ever sold for a resistance level. After that, we have 1947, 1947, November and January 1948. May wheat high was 306, 7 by 8. Study the weekly and daily charts and the time these highs are made, and you will see how the trend turned down. Now, first and most important thing is probably we had a high which was 306, 7 by 8, which was just nearer to our previous high of 324. So that's why it has been mentioned to just note down the levels between 300 and 325. 300, of course, it has been given that uh, these are like multiple levels. We have 100, 200, 300. So 300 is again like a milestone which is there, and that's why these are being considered as critical levels. Now our price of 306, 7 by 8 exactly came between 300 and 325. So of course, this prices started moving up. Now again, in terms of extension, if you want to see, you can just probably look down from this reversal level, which is bottom high, and then a reversal coming to almost 62 levels, how much the market had moved up. So this is again, consider this as a homework for movement on upward side, and this movement was almost till 1948. You can just mention what is in terms of ratios or an extension that we get Maybe it can be 200%, 260%, 300% or something like that. Just mention it in the comments. Probably whoever comments on that part maybe can be eligible for some free goodies from our side. Let's move further. From here again, we got a retracement which came back down. Let's look at that. This probably came in somewhere around July 1949. So let's try to look at that. The first decline after the high in January 1948 was very rapid, and in less than 1 month's time, it declined to 229 in February 1948. So our low was somewhere around 1949 July. So let's move further. Then rallies to 252, and in February 1949 declined to 196 and a half. You can see by the chart, July 1949 low was 191, 3 by 4, and after this the trend turned up and made higher bottoms and higher tops. So July 1949, so somewhere around, yes, July 1949, we see a bottom which has been marked over here, and the bottom is at a line of 192. So just below that, 191, 3 by 4 is the low that we are getting. Now again, this level is very important for us, which is 191, 3 by 4. We can consider this somewhere around 192 because this level has been marked over here. And if we look from the bottom to the high, let's look on the chart where exactly this level is coming down to. We had our bottom, which is 43, and from there it was being made as a high. So this was 306, 7 by 8, which comes to 875. So that has been rounded up to 0.9. And if we look from this to a bottom, maybe at 50% level, the 50% level comes down to 175. 175, and just nearer to that, we got our bottom, which was at 191. Just above our 50% level, precisely coming back to those levels. So from this bottom to the high, again we got a reversal, and this reversal almost came back to the 50% level, and 50% is one of the most important rules which has been given by WD Gann. Now again, from this high to this low, we can again get back one reversal over here, and this reversal happened somewhere around in 1951. Let's look at that. 1951. 1951 February high was 261, made the next low of 235. So we had a high which was of 261. December high was 265 and a half. This was final high of this upswing. You would sell short and sell more at the way down after prices declined below 235. Now let's try to look at this highs of 261, 265 and a half, and where exactly do we get them. Now December high of 265 and a half, if we'll plot this on the chart, from the high of 306.9 to the low of 191.5, 265 comes to somewhere around at a level of 0.36, 0.36 or 0.35, which can be considered accordingly, but just again between 50% level and our 25% level, which is again something critical for us to just note down. This is how we would be able to plot all these things together on the chart. We have seen from the high to the low and the reversal that we got. So from the high of 325 to the low of 101, we got a retracement which was coming to the 50% level. And this 50% level was coming to somewhere around 2057 by 8, which is just nearer to the 50% level, rather just lower than that, which shows about weakness, and that's why the market started coming down. From here onwards, the market did fall down somewhere around to 44 levels. 43.38 is the exact level which has been coming down to. And from this low levels, again, we got a high, which was 145. So 1937 high was 145. So 145 is what we are getting over here. So we got this bottom 43 and then a high of 145. And from here onwards, the market again started coming down. So May wheat was selling around 62 and a half in August 1939. So 1837, we had a high of 145, and from there the market did drop down to August 1939, where the low was 62 and a half. And from here again, the market did a bounce back to around 300 levels. So January 1948, we got a high of 306, 7 by 8. So January 1948, we got a high. And from there, again, it did a drop down. So from our high of 306, it did drop down to 191.5 or half. That is what we can consider. And from there, again, it did retrace back to somewhere around 36% level, coming back to 265. So this is how we can summarize overall on the chart. And again, we can see how the price movements has been coming in terms of Enneagram. So this is how the structure of the market is there. So we have May wheat, which is being shown in terms of swing. And this is the Enneagram. We know the Enneagram is moving from 1, 4, 2, 8, 5, 7. This is how the structure has been shown in terms of time and price, both of them. And if we look to adopt the same structure over here, that is 1, the levels have been marked. So we have level 1, we go to level 4, and from level 4, we come back to 2, and this is the level 2 which has been shown over here. And from 2 we go to 8, then 5, and then 7. So same way the structure over here is, we have 1, and from 1 we can go to 4, and from 4 we can go to 2, and from 2 we go up to 8, 5, and then probably we gradually move up to 7. So 8, 5, and 7, the structure is being shown over here. So gradually we can just draw the same structure over here. We have made it much more easier over here, just showing the structure. So here we will just like to summarize all the three things together. The first and most important thing on wheel chart, the chart which is there of wheat that we specifically saw, is the time cycles. 1852 to 1867 is 15 years cycle. Same way from 1867 up to 1897-98, we have got a 30-year cycle. Again, from 1852 up to 1912, if we see, this is a 60 years cycle. Same way from 1867 up to 1917. 1917, which has been shown over here, because from 1867 we had a high which was exactly to $3 or 300 cents, and in 1917 we have got a major high which was 325 bushels, 325 cents or $3.25. So this high to this high, this has come exactly to 50 years, which we can call as the Jubilee year cycle. And Gann has mentioned especially about that in terms of time, times and a half, and the Jubilee cycle. Fine. So we'll again in the next section come down about with some again interesting things which should be helpful for all of us. And if you like to know more about such interesting things, you can definitely contact us. We would definitely like to share much more things with you. Till then, goodbye. Thank you so much. Bye. Take care.